Okay, I want to welcome everybody to another episode of The Accidental Entrepreneur. We have a guest from Florida, sunny Florida. We're in New Jersey here, so I'm jealous of where he is and what he's doing. We'll talk about that a little bit. If you are listening on your favorite directory and you can, please leave us a 5-star review. And if you're watching the video on YouTube, be sure to subscribe to the feed, hit the like button so we can keep bringing valuable content and good conversations like this to people that need them. So I want to welcome my guest today, Martin Saenz. You corrected me on your pronunciation of your name, right? And you said you're down in Sarasota?
Correct. However, I grew up in Westfield, New Jersey.
There you go. So I live in Westfield, New Jersey. We talked about this.
Yeah.
And I'm in Clark right now, but Westfield is a nice place to raise a family. So we'll get into your whole story. Tell me how you ended up in Florida, but maybe you want to go back, talk about, your experience and how you got into investing. We'll take you through you can take us through the timeline a little bit.
Sure. So after getting an MBA from Drexel University, I had, aspirations of joining corporate America and climbing the corporate ladder. And what I found in my first corporate job was that I was just very unhappy. It wasn't a fit for me. I felt very constrained and just the whole politics of a large corporation just
what kind of companies were you working for?
I managed a call center for Sears Roebuck.
Got it.
And which
a little different than what you're doing now.
Dinosaur, yeah.
Right.
Yeah, and so so I had about 100 people under me, and I was just in the grind 7 days a week.
Got it.
And so I left Sears after a few years, and my wife and I just decided to do our own business. That was the way we needed to go.
Got it. How long ago was that?
2004.
Okay, so a while ago.
Yes, so a while ago. So
18.
we went through the whole walk in the wilderness as to what kind of business to open, what are we good at, what do we like to do, like all this kind of self-reflection and brainstorming. And what we came up with is the fact that my wife is very creative. And for myself, I wanted to sell a tangible product where there was a strong need behind it. And since we were living in the DC area at the time, we decided to open up a museum exhibit company that sold to the federal government as a prime contract holder. Okay,
so you sold exhibits for their museums? Like they had RFPs they would put out looking for exhibits, and then there was a whole process. How did you even find out about what that was?
So it's interesting. It's hard enough if you have if you're competent in a certain area and you start business and you try to grow a client base to serve with the expertise that you hold. It's another thing not to have the expertise, the equipment, the know-how, and to sell to the largest customer in the world, which is the federal government, with mounds of bureaucracy. So we started out in the Valley, and it took us about 3 years to really figure it all out, if you will.
But what makes you, and you'll tell me this, but what makes you go into a business that seems so insurmountable? You have no expertise. Dealing with government's hard. It's a lot of red tape and paperwork figuring the whole system out, as opposed to, there's been thousands of businesses you could have started, gotten involved with, probably that had even franchises that come like a business in a box, and you follow their formulas and things like that. What made you attracted to this? I've never even heard. I didn't even know you could do this, by the way. But.
Oh, it's mind blowing. If you go into any of the major federal buildings around DC or around the country, there's always art programs. There's always exhibit displays, and there's just a lot of promotion that each individual unit does in the federal government, because they're always fighting for dollars.
Right.
So they have to present themselves as the unit, or their value has to shine. Yeah.
If you don't spend your money, you lose your money, basically.
And then if you don't spend your money, you lose your money.
Well, were you in the DC area at the time? Because Drexel, I know, is in Philly. Right?
Yes.
And then you ended up in DC for your corporate job. That's where you guys settled.
Yeah, so I initially
Yeah,
took a
oh, that
job in
makes sense.
Sears on the finance side. So and
In
then
that
they
area.
in Philly, actually,
Oh,
in
okay.
Trevose, Pennsylvania, outside Philly.
Got
And
it.
then they relocated me down to manage the call center in the DC area. And I thought it was a promotion, but it was just like the kiss of death.
Right. All right. Well, that makes a little sense, though. You're in DC, right? The biggest
Yeah.
employer and
Hmm.
contractor is the federal government. So I guess a lot of people look to start a business. They're like, well, we're in DC. We might as well see what we can do with the government, right?
Oh yeah, I mean, you either work for in DC, you either work for the government, you sell to the government, or you're in the military, which
Makes sense. Right.
you're in the government as
Yeah.
well at that point.
Okay.
Yeah.
So how did you, I know I'm getting lost in the weeds a little
Yeah.
bit here, but I'm interested. So how did you come across the idea? I mean, the idea of selling to the government obviously is a broad category, right?
Hmm.
So then what was the resource? How do you start finding, okay, well, what could we sell to the government? Does
Yeah.
somebody do that?
So it was first about the product, like what my wife and I felt like we could build a business around.
Okay.
And we had the good fortune of having there's a lot of government contracting communities in that area. So
Got
just
it.
like you join a chamber of
You could tap
commerce.
into.
Exactly, you tap into, and then you
Okay.
start kind of putting the tentacles and planting the seeds and all that.
Right.
And that's what we did.
And you started learning. And then you found that somebody sells exhibits to museums.
Yeah, yeah. Exhibit products, signage, artwork to the federal government, and they buy a lot of it.
Right. So how do you find the product? I mean, you weren't in the
Mhm.
museum business, right?
Mhm.
So you had to procure exhibits. You don't call King Tut in Egypt and said, hey, can we bring your exhibit over here? Like, how do you write a business plan? How do you get that started?
Yeah, so we actually, my wife self-taught herself in Adobe Illustrator in
Okay.
Photoshop. And we bought equipment and we got trained on the equipment, and then we hired an individual. So we fabricated as much as we could fabricate other than custom millwork. So it was a combination of in-house fabrication and some outsourcing, and we handled all the installation ourselves in-house.
So what do? They put an RFP out and say, hey, we need an installation for this thing that we're doing, and here's the specs and the parameters, and you just have to put it together, submit it, and get chosen? Is it that easy?
It's really not.
Okay.
There's with the federal government, there's a lot of bids that are wired. So in
Okay.
other words, what that means is that the contractor they want to use writes the RFP for the government,
Right.
and they write it in an obscure way where only they can produce a quality bid.
Right.
And
So you say
so
wired, mean it's a setup.
it's a setup,
Right,
yeah. So in
exactly.
Jersey terms,
Not
right?
fair bidding, right? It's totally in Jersey terms,
In
right? We
Jersey
used to pay
terms.
for play, all the BS.
Yeah. Yeah, so the government has mastered that, but the federal government has
Okay.
mastered it. But
Okay.
anyway, but sometimes you're on the receiving end as well. So
Okay.
I'm just saying, right?
Yeah.
And then but then also too, you become an expert in proposal writing. The thing is, you have to befriend certain people in the procurement departments. You have to get in with the SBA and have them kind of help push you
Right.
along in certain cases. And it's a lot of kicking and scratching for sure.
I'm sure. So, okay. So you're building that business up. You had a whole plan as to how to do it, the marketing, the networking, the working in. How did that do? How many years did you do that?
We did that from 2005, and we sold the company in 2013.
They did about
So
8 years, and you
yeah,
sold the company. So what did people buy at that point?
well, we were the only exhibit company that held a blanket purchase agreement with the Pentagon.
Ah,
So
okay.
they were it was sole sourced. So they could just call us and we would be bidding against ourselves initially.
Right.
And as long as stars aligned between what we estimate a project to be and what they had in terms of funding, they would pursue the projects. And so when the idea is, and we did some work for the Smithsonian Museum, the idea is that once you get into like the head of the dragon and you start doing work for them, like you're good for everyone else. Like you become golden. And
become like authorized, approved. You were the
yeah,
approved vendor.
it's a yeah, you become, yep, exactly. It's a certification kind of thing. Or
So how did you become the only one? Must have been a lot of competition.
We actually kind of lucked into it. So when we started, we were working out of the basement of our home.
Okay.
And then we were just taking little projects here and there. And then one of our competitors, which is a 50-year-old company and they are well established, they would snub their nose at us, like, because we were just kind of little scrappy. And so they were always kind of looking down on us. So, but they were doing work for the Pentagon, and
Okay.
and they had got a call from the Pentagon. They're like, do you know any SBA 8A companies, which is like a minority designation,
Right.
that we can lock in work with? And so then now I became a friend, right? They're like, oh yeah, well, if we give Martin and his wife Ruth this contract, then they're just going to feed us in the back door with subcontract work.
Which you
And
did.
so, which initially, but that got old quick. And,
Right.
you know, cause then you just become like a servant to them, you know, and it's like, no, it's not the way it is. So, and actually the end customer started not liking them as well, because just personality and gouging and stuff. So it was we cut the cord with that other company and just started doing the projects ourselves, and just kind of.
But you just lucked out because you met the criteria. They were looking for somebody and kind of worked your way in.
Yeah, and like at the end of the day, I mean, it's something along the lines of the Pentagon. I mean, you have to come correct with the quality and the professionalism, and everything has to be top notch. So, you know, the minority is just kind of like the entry ticket into the door. Right. You know, the rest you have to perform like anyone else would, or you.
So somebody
is that
who bought the company? Somebody who had a minority background too that could qualify.
Yeah, but they never kind of fulfilled that direction for themselves, and it's still, the company's still existing. It's still in existence. Yeah, and actually it's on a different owner now, and
got sold again.
So we own the commercial building. We bought the commercial building that the company operated out of, and actually I just sold it to the third owner, and closed on it 2 days ago with a seller note.
Got it. So you basically were the landlord. Once you sold the company, you held the real estate. They were your tenant for, what is that? 8 you said, so 14 years.
Mm-hmm. Yeah, the second owner was a tenant, and then it got sold to another owner, and then they were my tenant, and then we just sold it to them with
just don't want to be bothered.
30-year note. Yeah, just want the cash flow.
Okay, so you cashed out. Were you already involved kind of in real estate at that point when you sold the company in 08?
2013.
Oh, 13, it was 8 years, right?
Yeah, we were buying commercial properties, and in 09 we started buying. So anytime we closed out on a project, received a lump sum amount of money, because everything is you're paid at the end of the job.
Okay.
Yeah, it's you know, firm fixed pricing, and you're paid once the job's completed and inspected, then you get paid after that. So we get a check in the mail, and then we go out, look for a property and buy a property. And that's kind of how we kind of grew things that way.
So you were kind of building a little portfolio. So did you know anything about real estate at that point?
We were studying on it since 04. So Rich Dad, Poor Dad. We were we took seminars. I mean, we knew that we wanted to get involved in real estate, but we knew also too that we needed to have a business that was providing stable cash flow,
right?
First, before the next move, which is a move into more of an investor role.
So the whole thing was kind of strategic, right? I mean, you took 5 years to learn real estate. You were now started the procurement business, and I mean, that makes sense. It was kind of I don't know if it was a written business plan all combined, but it kind of was, right?
Yeah, I mean, I think I stumbled along the way, and I mean, it
Right. Well, the
sounds
accidental
packaged
entrepreneur.
and
There you
pretty.
go.
Yeah,
Yeah.
yeah. I mean,
Always
it
looking
sound
back.
yeah, yeah, yeah. I mean,
Right.
I'm giving you like the highlights, right? The milestones, but no,
Right.
it was there was a lot of ugliness along the course of things.
So what do you think? So the Washington business was your first business, right?
Mhm.
What do you think you learned running that business that helped when you made the transition into being a real estate investor and property owner?
Yeah, that that I was not going to achieve the freedom I was seeking through small business ownership, where I was the whole business.
Right. Because it was always a
And
one-off, right? Once the contract's done, you need another contract.
it's transactional,
Yeah.
and it's and then it's also grueling in terms of work schedule. And so you have no freedom of time, you have no work
Right.
life balance. And I could have worked myself out. That may have been like the strategy, but I still had to be the client interface,
Right. They were dealing with
client.
you.
Exactly. Yeah. They're halfway buying from me, and then
Right.
the other half the product. So you could never kind of get out of the game, so to speak. And sometimes the game is you're in DC and you need to be in Dallas, San Diego, blah, 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 blah.
And you would
And
travel a lot.
yeah, and then we started having a family. And then so I learned that that was not the level of freedom I was aspiring, and I needed a better way.
Right. Passive income. Somewhat.
Yes, that's 100%. That's why 2013, when we sold the company, I took back a seller note with the
Okay.
buyer. And then just from that, it was kind of an eye-opening experience. I'm like, wow, I have this note every month that's paying me.
Right.
And I'm like, this is without me having to travel, without me having to take stress, without me writing proposals till midnight. And I'm like, I need more of this. And that's when it started moving me in that direction of BeQuest.
Got it. So at that point, though, you were a private investor, right? You started in 09, you said. What kind of
Mhm.
properties did you own at that point? You owned the building you were in. We knew that. So
Yeah, industrial spaces. They were industrial spaces. So I mean, there's a
like
larger
warehousing and stuff.
condo. Exactly. Yeah. They call them flex space.
Oh, sure.
Yeah.
Yeah. Office, and they have a dock and warehousing
Mhm.
and stuff like that for small business.
Yeah. And what's amazing is that what I found later in life, and if I would have known it at the time, I would have spent more energy trying to buy more properties. But they don't build these anymore in many locations in the country.
Right.
They want to zone large homes, zone for large home building. Like nobody wants an industrial park by
Right.
their
Right. So these
house.
flex space buildings, you don't see them going up as much.
Especially like on the smaller size, anything 2 to 10,000 square foot. They may build a monstrosity for
Right. For
Amazon.
Amazon. Yeah. Right. Sure. But I guess warehousing and logistics is that's like what you want to be in right now. You don't want to have residential apartments and certainly don't want office space
Yeah.
right now. It'll come back. But okay.
Yeah.
So you started out with it was always commercial and
Commercial.
industrial?
I did some residential. We bought some residential properties, but they just were never as lucrative,
Yeah.
and there was always more maintenance involved because people in an industrial space. I mean, two of the tenants were churches, so
Okay.
they would only be there 4 hours out of the week, something like that. I mean, what kind of wear and tear on cinder block wall can
Right.
occur?
Yeah.
And then take like a house where they're beating the hell out of it 24/7.
Right.
There's
Yeah,
just
it's more maintenance, it's more involved. The tenants need stuff. They might have a plumbing problem in the middle of the night. They don't really have that in commercial spaces.
Yes,
Yeah.
exactly.
Yeah. And I assume for people listening, we can explain what it is, but I assume a lot of these the leases were either net or triple net, right? Where the tenants really had responsibility for everything.
Yeah, some were, some weren't. Just
Okay.
gross leases, and so it just depends. Either way, I mean, it's such a low maintenance, low effort type investing.
Yeah. And those were
Asset
in the
class.
DC area when you started? Is that where you were buying properties?
Yeah, on the Virginia side.
Virginia
Yes.
side. Got it. Is you still own a lot of properties there?
No, I've been actually selling them off over the past 3-4 years with I'm trying to do as many with seller financing as I can. So That way, just create
Got
the
it.
paper.
So you're getting into the note business.
Oh, yeah, that's BeQuest is the note business.
Got it.
Yeah.
Got it. Well, we'll get into BeQuest in a minute.
Yeah.
So, all right. So, when did you move to Florida?
So
Just recently?
2020. So we operated BeQuest out of Virginia for a while, and we moved to Sarasota in 2020.
Got it. And was BeQuest originally just you and your wife, or were you always looking for outside investors in that company?
So no, so we started taking on investors. I have a business partner on the BeQuest side,
Got it.
and we formed a partnership in 2019.
Uh-huh.
And prior to that, I was buying mortgages in another entity for the most part. And so that was just my entity. My wife actually, we have 4 children. So she was homeschooling. So we
Got
started
it.
having children in 2012, and then
Right.
she's been homeschooling well before COVID. And so she didn't want anything to do with business anymore. The government and the travel burnt her out. She doesn't, she doesn't want anything to do with it now, actually, too.
Okay. So at that point you switched from still own properties, but then you were looking to buy paper. So I know what buying a mortgage is. Maybe you can explain what it's basically a secondary market of buying mortgages is for a private investor. Maybe we want to explain that.
Sure. So there's a secondary mortgage market, and how it essentially works is you have a bank that originates a mortgage to qualified homeowners that are looking to buy a home. And what happens in about 4% of the cases is these mortgages go into default.
Right.
Whereas someone loses their job, there's a health issue, or there's a divorce. That's usually the case.
Okay.
And after a few years of those loans sitting on the bank's balance sheet, they'll bundle them up, and sell them into the secondary mortgage market to a fund or another lender at a discount. So if there's a principal balance of 100,000, they might sell it. At the time I was buying them, maybe like 15,000-20,000, something like that.
15-20 cents on the dollar.
Yeah. Yep. Exactly. And so I buy these mortgages, and then you have a choice to make at that point. You can exit through the property through foreclosure.
Right? Take back the property, sell it off, get your money, move on.
Exactly. The other exit is you can exit through the homeowner through a loan modification, essentially. Or they refinance you out or something like that.
Right, if they could.
Yes, if they could, which at 10 years ago they couldn't, because nobody had equity for the most part. Most people were underwater. So I decided the loan modification was it's the longer term play. Yeah. But it's more compassionate, and it's more in line with kind of my values. And even though we can make a bigger bang for the buck, selling the property, foreclosing, displacing, and selling the property. We want to be in it for a long-term cash flow stream and keep the family in the home. Yeah. And so we just started buying more of those loans. I self-funded for a number of years, and to
make the purchases.
Yeah. And I would exit out, like I might modify a loan, and then I might sell the loan. So
you could resell it.
Oh yeah. The resale value spikes way up once you reseason the loan.
Got it. Reseasoning meaning get it working and get people paying and have a better history, right?
Exactly. Yeah. Get them paying, and over 12-month period of on-time payments, they become reseasoned.
Right. So you also, if you buy a $100,000 note, you paid 20 grand for it. You don't sell for 100,000. If you sold it for 60, you tripled your money, right?
Yes, exactly. And so I stayed small for about 4 years, but then I also was able to build my systems, and I learned every aspect of the business myself, because I did every aspect of the business myself. Right. But it was still better than the government contracting business, because I didn't have demanding government, officials that were just barking at me all day.
Right.
I was just going at my own pace. So it was very, very nice. And I wrote a book, Note Investing Made Easier, in 2017. And then I wrote a couple other books based on the systems I put together and just kind of laying out my day-to-day as a note investor and so forth. And so I started getting people reaching out to me, and one of them was my business partner now. And he read my book. He came out and spent some time with me. We started doing some deals together, and we launched, we put together BeQuest in 2019, launched it 2020 to take on investor capital and buy reperforming mortgages. These are mortgages that are reseasoned.
One
they've
step
been
ahead,
modified.
so you don't have to season them yourself, and you make less profit, but it's less work, less risk.
Yeah, so we still kept the private fund that it currently owns about 35 million in mortgages. The private fund, most of that's
face value of the
distressed.
mortgage.
Yeah, exactly. It's mostly distressed debt, and but there are mortgages that it's an incubator, so there's mortgages that are being seasoned in that fund now.
Got it. And then they move over to BeQuest. Is that what
And
happens?
they move over to BeQuest after they meet certain criteria, and they get sold into BeQuest at a 65% investment to value. So
Got
that's
it.
a
So if
heavy.
you pay 20 cents, they would buy you out for 65 cents. So your private fund makes money, they get a seasoned mortgage,
Mhm.
and you have a bit of a feeder.
But pricing's no longer 20 cents. so
Right.
Pricing's gone up because the equity coverage, the quality of the assets, and everything's gone
Yeah, the
up.
margin shrink.
Yeah, but still the private fund still does well. BeQuest gets an asset in at an 11 to 12% yield for a purchase price. And it allows us in the income fund to pay our investors a 9% annual pref with payments made on a monthly basis.
And then you make the difference.
And then we make the difference. Yes.
Right. Okay. So let's go back a little bit, because you started in a business you knew nothing about with procurement with the government. Then you moved into real estate that you taught yourself and you started to learn, and commercial. I like flex space. I like commercial space.
Yeah.
And then how do you get into buying mortgages? I mean, it's not like you go to the stock market. You have to. So how did you work your way in there and start finding products, mortgages that you could buy? Is there an auction process? What's the whole process?
Yeah. So I went to a local real estate investment club, AREA, and then I ran into like a national salesperson that has like a sales operation for training you how to be a note investor. I took a 3-day class, which was really just kind of like an emotionally charged cheerleading session on how you're going to just be a bazillionaire doing this. And so I learned enough to kind of want to put my money out and get started. And I didn't trust being in their program, and that it was I think it was gonna be more beneficial to them.
Yeah,
like
a lot of those programs are like that.
You buy their notes,
right?
You buy everything.
Right.
All the money gets, they're in the middle of everything.
Yeah,
and,
of course.
And so I'm like, okay, well that may be good, but I wanna learn this. I've been landlording for about 4 years prior, so I want to give this a go. So I bought 10 mortgages in Ohio.
From where?
So this was in an exchange online called
you found it online.
Yeah, FCI Exchange is an online exchange. You could go buy a note, but they shut down. Because they had a real bad lawsuit where they were an exchange where people can
like
buy
a broker.
And sell.
They were brokering mortgages from the banks to you.
That's why they got in trouble. That's why, because someone didn't like what they clearly put that we're not brokers. We're just getting paid a fee to do matchmaking. But then someone sued them because they're like, no, you
are a broker.
Validate, you're acting as a broker. Someone messed it all up.
Right.
And now, I mean, there's PaperStack, which is the largest platform for buying notes, but there's really not much inventory on the retail side for this industry
Okay.
now. So what I learned is everything's relationship based, go figure. And so you have to go to the conferences, you have to go take people out to dinner, you have to go
People that manage
have,
these distressed portfolios for lenders, right?
yeah,
Directly.
yeah. And just really they have to know that you're competent, that you know that you're not going to bring them into a lawsuit or some type of PR nightmare.
Right.
And so there's to be some trust that's built. You have to buy a few notes, you know, make sure that they understand that you're easy to transact with. And then so over time, just start transacting more and more. And what's happened is that over the course of time in the 2010s, equity coverage, equity situations with homeowners was getting better, progressively better. And as that was happening, the price of notes increased as well as compliance increased. So people that didn't stay up with that trend started falling out, and less inventories trickled down from the big boys down to the retail level. So a lot of the small mom and pops start going out of business. And this is probably no different than
Any other
on the
one.
flipping real
Sure.
estate side, you know, the mom and pops, you know, the death of the mom and pop, you know, investor, because there's no product on the retail level. And retail players sometimes have trouble scaling up into wholesale level play. And so same thing in the mortgage note industry, but we started scaling, building systems. And then my partner and I, you know, he's came from corporate America. He brought that whole, you know, professionalized the whole system, if you will. And then we just started buying larger and larger pools. And so we have
which is a package of mortgages.
Mm-hmm.
Okay.
So the distress fund is privately owned by my partner and I. We don't have any
investor. Got it.
Yes. And then the BeQuest, actually Sean and I are the largest investors in the income fund too, because we actually launched in 2020. We weren't going to take any outside investor capital. It was a friends and family fund. That's why we launched it. It's evergreen, so there's no expiration date. So we wanted this just to pass down to our children.
Yeah.
Like that was the whole idea.
Building wealth. Right.
And then in 2021, we started seeing some larger trades. And then we started bringing on investor capital from accredited investors we didn't really know. And so that's kind of where we are today.
Got it. All right. I think there's some really good lessons here because, you know, as an entrepreneurial podcast and as a business attorney, I say this all the time, a lot of success in business. I mean, like you said, some of it's planning, some of it's building systems, some of it's being strategic, but a lot of it is building relationships, networking. It was the same in Washington as it was when you went into the real estate business, as it was when you went into the note business. That's how you got your partner too. And I think a lot of people overlook that. They start a business out, whether it's in passive investing in assets or it's more of an active business, retail, whatever. And they set up and they put some ads in the paper and they're doing some social media and they're out there and nobody's coming through their door. And you didn't have that luxury, right? You couldn't just sit around and wait for notes to walk through your door. That wasn't going to happen.
No.
Or real estate for that matter. You'd go with a broker. That's all retail stuff. So you're not going to get any leverage with any of that stuff. So instead you went out and you build a relationship. A lot of people have to understand networking really, really is important and works.
Yeah, networking and just be likable, right? Like how do you start relationship building, right? Just be someone people want to be around. Like, don't be arrogant, don't be something you're not, be genuine, be humble.
Nice, you mean.
Be nice.
Yeah.
And that's the whole starting point. And what I found over the years with real estate and note investors is that there's a lot of people significantly smarter than me, like IQ wise and all this and that. And they focus right into the technical, like how can they build better systems? How can they do this aspect better? And they spent very little time on the relationships and they don't have any deal flow.
Yeah, because that's 80-90% of the deal. That's in any business.
Yeah.
It's all relationships. And I think you're right. If you're friendly, if you're truthful, if you're honest, because people can see right through that. And they get a funny feeling. you build trust with people. And then people
Yes.
want to do business with you because whether people admit it or not, they like doing business with people that are nice. Like it makes you feel good. I don't care if you're in the government, you know, you're in the Pentagon or you're in a bank. You got to deal with people. And if they like you, they feel like they're doing their job and they're helping you, even if that's
Yes.
psychological and psychosomatic, they don't realize it, but that's human nature. That's why networking works. That's why trust building works.
It's like what we're saying. This is probably the most significant piece of everything we're talking about. When people give money to us,
Yeah.
and they trust us. I mean, like I hear it all the time. Like I'm trusting you with my
Yeah, they
my
have to.
money. And
Right.
and so they're saying like you seem like you're really on top of it, you're engaged, you're passionate, like they see these attributes and that's why they're giving it to me. No one's ever given me a check and be like, you seem so intellectually superior to the other
Right.
people I met, and so
Right.
you must know, you must be a better steward.
Right. No, that doesn't meet the criteria. That doesn't meet the gut punch, the good feeling about trusting somebody with your money. Because ultimately, look, you and I both know people have taken money in and have been shysters and have been launderers and have left the country and have, pretty well-known people have been taken. You don't have to be just a little guy to get taken. And you get one shot at it, right? If you screw it up, if you don't handle their money well, they're going to tell everybody. They'll tell one or two friends that you did a great job. They'll tell 100 of their friends that you ripped them off and you're a criminal. So, and I think it's pretty evident that no matter what business you went into, if you wanted to go into a totally different business, you would probably have a pretty good high chance of being successful because you understand what it takes to build relationships. It has nothing to do with, you didn't know anything about the procurement business that you did in Washington. You didn't know anything about real estate investing. You didn't know anything about note investing. You went out, you could find that. You don't need to be brilliant.
Yes.
You're smart. You are brilliant because you go and you learn this stuff. And even when you go to these seminars, I feel the same way. You go to these seminars, they're rah, but there is information to learn, right?
Well, it's more than, I mean, like they were there, they're like, oh, go tell your uncle, Joe to cut you a check. And they started talking about bringing all this money. And like, I didn't do that until it was feasible, or like we were scaling to a level where we needed outside capital. But if out of the gate, when I didn't know what the hell I was doing and I started asking family members for money, I mean, that's really bad.
It can run into some real problems. You got to be real careful when it comes. Also, you mentioned accredited investors for people listening, right? When an accredited investor is basically somebody who has a net worth of more than $1 million right now, right? And they got to be, their income could also be 200,000 in the last 5 years or something like that, right? So there's some criteria that you meet. If you're just raising money from friends and family and people that you really don't have those issues. But if you're now going out to the general public, the SEC has some very strict rules about who you can bring into a private investment, basically because they don't want little guys to get screwed. That's really where the rule comes from, but it's properly enforced.
Yeah, they want, they consider the accredited investor a sophisticated investor.
Right.
And what's interesting is that I saw a statistic, 36% of individuals earning 200K or more in this country live paycheck to paycheck.
Yeah, no, the criteria is wrong. The thresholds are wrong. Just, you could be worth $1 million because your home's worth $1 million and have no money.
Yes.
And living paycheck to paycheck. It really should be a higher level, but then, it's the other side of, well, then you're shutting out all these people that want to invest. They have loosened up those rules a little bit. It used to be with a 35 number, the accredited investor, you can bring in 35 accredited investors. The guys of the SEC always felt that was a guideline. They didn't think that was like a hard fixed rule. So depending on what you were doing, they might say, oh, that's 20 is too many,
Well, the 506B, which is a non-general solicitation status with the SEC, that you can get away with up to 35 investors. I think that number is still correct. That are non-accredited. The onus is on the investor to verify that they're accredited.
Right. They fill out the form and you got to accept them face value.
Accept it. But with our fund, we're 506C. The responsibility falls with us to ensure they're accredited, and we can get in trouble with that. And to be honest with you, like, we don't want that exposure, and we don't want someone using their last
then they come sue you because you ripped them off and you didn't do your due diligence, and that's the last thing you need. Now, do you have to also file a Regulation D filing, and you have a prospectus and everything, subscription agreement, that kind of stuff, private placement memorandum, I guess better?
Exactly, yeah, we're Reg D, and we have to file for blue sky laws in all the states. That, you know, we provide a list. We have an SEC attorney out of Delaware, and we provide him a list with new investors, and he gets.
You're filed in all states, you can take investors from any state in the country?
Yes, we can, but if we take on an investor in a state we're not currently registered in, he has to register us in that state.
I think
So
you have
we're
a
not,
period of time, right? You have like,
it varies by state with fines, and New York being the stiffest one. If you're like a second late, it's pretty hefty.
yeah, exactly. But that's all part of, you know, learning about doing things right, getting the right people on your team, and you know, and figuring it all out. A lot of people invest in real estate. It doesn't become a business for them. It's more of a passive investment activity.
Yeah, there's a lot of and I'm not going to call something illegal or you know, whether it's legal or illegal or whatever, but there's a lot of deals that were put together that I don't think were legal in the node industry over the years, and probably same with real estate, where they're, you know, the operators commingling funds, and you know, through just a loose LLC structure without any registrations. And yeah, that happens like a lot. And I know you have to be very careful, especially, we would never do that, but if you're taking retirement money with ERISA laws, I mean, you could really get in trouble.
Get in a lot of trouble. I think the real estate business always felt it was like a hybrid, you know, because of partnerships, limited partnerships in the old days when people would invest in real estate deals and stuff like that. There was nobody really followed any of those rules. And then at the time, as people were investing in private businesses and people raising money and funds and things like that. So is BeQuest an actual fund? It's considered a fund?
Yes, it's a private fund.
Fine. So people own shares in the company. It's a Delaware corporation, you said?
Correct. It's a Delaware corporation. They're an equity stakeholder in the LLC, and which makes them a part owner of the entire portfolio.
Are they non-voting shares, or how
non-voting? Correct.
So you and your partner really control the business.
Yeah, and that's intentional. And you know, I've had every once in a while you have someone, they're like, oh, well, I want a controlling share, you know, in the company. You're like, and I'm like, oh, you want to come work here, you know, 5 days a week?
Exactly. That's a controlling share.
We need another, you know, and then they're like, no, I'm not. Like, oh, so you want to not be involved, but you know, have all the perks of being involved. Yeah,
of course. So tell me about your company structure. There's the two of you, and you have other employees in office space. Is it a virtual system?
No. So we have 22 employees, and everyone reports in. We're not a remote workplace. We have a work culture, HR director, marketing director, investor relations director. We have a team of collectors. We have investor relations sales professionals. So there's a whole system. We come together for morning meetings in the morning. And I'm not sure if it's kind of as open or free up in Jersey now. I haven't been up. I was in Cape May about a month and a half ago. That it was just so nice to see Cape May again.
Yeah, Cape May's great. Yeah, everything's kind of
okay. Everything's good. Good.
Yeah. I mean, you still have to wear a mask if you go to your doctor's office and hospital, but
same here. Same here.
Yeah, it's the same. Florida's a little crazy.
Yeah. We never really shut down here.
Yeah. So what made you guys go to Florida?
You know, I've always kind of wanted to go to Florida. It became as we were doing better financially, the tax savings just was more appealing. There's no state income tax down here.
Right.
And also to just the with the federal government being in the DC area, I think I just got jaded and kind of burnt out with the bureaucratic culture of entitlement. And so it's kind of everywhere. It's not just in a government building. I mean, it's the mentality.
The whole area. Right?
Yeah, just kind of wears on you.
Yeah. And nothing you do is, I mean, it's all you're buying notes and stuff. It's paper and any
Mhm.
other investments you have. You don't have to be, you can be wherever you want. Really.
Wherever we want. Yeah.
Yeah. What made you choose Sarasota over like South Florida?
Yeah. So, it was, we did the city thing, kind of being close to DC for a number of years. Sarasota is really like a small town. I
Yeah.
mean, it's just kind of like it's a vacation getaway kind of place,
Sure.
and
It's on the West Coast, right? Kind of close to Tampa, St. Pete.
it's
Kind of.
south of Tampa. So
Got it.
Tampa's the big city. I mean, you
Right.
want big city, you go into Tampa, but we're kind of like, it's similar to Naples. I mean, Sarasota
Sure.
and Naples, very kind of close. You got a few office buildings. And I mean, the water is just right across the street from
Right.
the office here.
The
and
Gulf.
The Gulf, and yeah, it's
No
just
hurricane issues.
no. So Sarasota has a lot of barrier islands, and so it's protected from a lot of hurricanes. Tampa gets it,
They do.
and south of us, but not Sarasota's. Doesn't get the hurricanes effect like that.
Do you own properties in Florida? Did you buy stuff down there too?
So we just bought our house,
Okay.
where we're at, and actually, I know you had mentioned, you had made a mention about office building. So what we did in August is we bought a 62,000 square foot medical office building in Houston.
Got it.
So we are starting to look. It's very strategic. It's not general office, but there's certain metropolitan cities in the southern U.S. Like Tampa, like Houston, Dallas, where there's still healthy migration into those cities, and there's aging populations. And so even with the recession that I believe we're starting into and is going to last a little bit of time here,
Right.
People still need to go to the doctor's offices. They still need to get
course.
lab work done and everything else. So
Yeah.
if we can find a building that we feel will serve the medical practice industry, we'll consider it.
You own the building 100%, or were you a passive investor in the deal?
We bought it at a 7.25 cap rate,
Okay.
and we launched a fund for it, and we did a partial raise. We put our own money in, and then we got leverage for 50% with the bank.
So you really did. You set up a private fund, private investors bought the deal. Now, who manages the property?
NAI Partners. So it's a property management. They were already in place, and they were
It was all
really,
packaged.
yeah, we're seeing good performance with them. So we're just managing the managers, so to speak.
I think there's a lot of opportunities for smaller guys who don't want to do what you do full time that can invest and get involved in this kind of stuff if they have the income to do it and still do what they want to do during the day. I think that's one of the attractive things. Yeah.
I think the thing is, the thing is for anyone is you got to start at some point. So you're not going to start with a 60,000 square foot medical building just to roll some of your money into. And you have to have money in all your deals. I mean, this whole idea, there's just so much out there where it's just like other people's money, and you just need to put
zero down. You can do this with no money, and it's just not realistic.
No, it's not. And it's just, I mean, it's risky. I mean, when there's a downturn or what have you.
Right. That's a lot of these guys go out of business. They're so highly leveraged that when the water breaks, when the wave crashes down to the shore, they're stuck. I've seen families, real estate families, go out of business because they're so heavily leveraged, negotiating deals with the banks, giving them back properties just so they can walk away scot-free.
Yeah. Or like just bad models where everyone, they model out the property and say like tenant rates are going to increase to infinity.
Yeah.
Like, no, that's not, there's a breaking point.
Of course, when things turn around. Okay, so I appreciate you spending time with me today, talking about, your background, your history in business, and hopefully people learn some things about, don't quit your day job while you're doing this, squirrel money away and start to build it, build relationships. You can do anything if you build the right relationships. What are one or two or three of the things that you maybe would do different, or you would give somebody advice if they're getting started, whether it's just in business or in the real estate business specifically, as as a new entrepreneur, I guess.
Yeah, I mean, if you're someone that is getting your income stable is just critical, because otherwise you'll be stressed out of your mind and you'll be wanting things to work that aren't ready to work.
Yeah.
And so, keeping, like you said, keeping your day job, but for that person that may have saved up $5,000 or $10,000, and they're like, okay, well, what do I want to go invest? And they start looking at crypto, and they start being like, I'm going to be a day trader, or I'm going to go wholesale properties or whatever. I would suggest spending that money building your network and subscribing to HubSpot, like a CRM system, getting some business cards made, go attend some conferences or some educational seminars, and spend that money on education and networking out of the gate.
Building relationships.
Yeah.
Yeah.
Because
Okay.
if you stumble on the right deal, the money will
Right.
be there. I mean,
Yeah, of
that's
course.
a fact.
Yeah, because good deals, people want to put money into.
Mm-hmm.
Yeah. Okay. I also wanted to ask you, you mentioned you've written several books. Are those all available on Amazon?
Mm-hmm. Yes.
Okay.
If you
And
put my name in on Amazon, you'll get the books.
okay, good. Maybe you can send me the links. We'll put them in the show notes
Okay.
too, for
Great.
people listening, and people can learn about investing. So Martin, I thank you for joining me from sunny Sarasota. It's actually
Mitch,
sunny in Westfield today, so it's not. Yesterday it poured.
Mitch, I want to invite you
Yeah.
on, if you can make it down to Sarasota on December 17th, we have our annual investor party. So I'd like to extend that
I'll see if I can.
invitation to
That's a
you.
day after my birthday, so
Even better.
even better, right? My wife likes to go to Florida whenever she can. So, all right. Well,
Okay.
I thank you for your time,
Mhm.
and let's stay in touch. I always like to see how my guests are doing, what's going
Yeah.
on, and how people get in touch with you. Best way to interact with you would be what? Your website, social media?
Yeah, I mean, folks can go to bqfunds.com. I
Okay.
have an ebook. If anyone wants to just email me at martin@bqfunds.com, I'll send you an ebook. If you have a general question, it doesn't even have to be like an investor related question. If you just have a general question, I always
You're
have
an
time
open
for
door.
people. Yeah.
Good,
Yeah.
good. All right. Well, I appreciate you spending time with me. Thanks so much.
Thanks, Mitch.